What's happening, investors? Dane here, and I hope you're all doing well. Let's speak about a company that are in the cybercrime, the cybersecurity space. They use AI and cloud technology to fight it. And just to give you an idea of how big this industry is, cybercrimes are estimated to cause 6 trillion in annual losses in 2021. 6 trillion. So it's obviously a really big issue that needs to be addressed. Cloud cybersecurity market will grow to 38.7 billion by 2023, and analysts are giving this company a nice price target from where they are now. Before we get into it, I'm just going to let you know I'm not a financial advisor. This is not financial advice. Please do your own research before investing. And also, this company, it's not a penny stock. It's not a relatively new stock. They've been around for a while and they've already seen a really big run up. However, analysts are saying, and I personally think that there is still room to grow. So if you're up to something that I would consider a bit more safer, that's going to be in a booming industry, then I will definitely stick around to the end, because we're going to go over this company in depth. We're going to go over the investor presentation, and we're going to finish it off, of course, with the analyst price targets for the stock before coming up with our own price targets. With that out of the way, let's jump into the stock action for CrowdStrike. So here we are, trading at $194.63 a share. As I said, they're definitely not a penny stock. They are quite expensive, or expensive per share, but I personally think they're undervalued. If we have a look at the 1 year chart, there's been a lot of growth already. We have seen massive 278% growth in 1 year, which is obviously huge. We've seen a bit of a pullback recently, and I put this pullback to just tech in general being pulled back over the past few months. I think it's something that a lot of us investors have felt. I definitely saw my portfolio hit hard because of this. So that's what I attribute that pullback to. However, this company has shown consistent growth over the year, and I think they're poised to continue to do so, because not only are they very good at what they do, not only do they see massive year-on-year growth of their subscription model and their software as a system model, but also because of the industry they're in. Right now, the company's got a market cap of $43 billion, and I think there is a lot more room to grow from here. Let's jump into the investor presentation for CrowdStrike Holdings. All right, CrowdStrike at a glance. First cloud-native SaaS endpoint security platform, 1.5 billion annual recurring revenue, 75% ARR year-on-year growth, 92% subscription revenue, 77% subscription revenue year-on-year growth, 9,896 subscription customers, and 63% subscription customers with 4+ models. So it is a subscription-based service, which means that, as they say here, as you can see, they have a lot of subscription revenue, which is reoccurring revenue, meaning they have this money coming in all the time, whether they get more customers or not. As long as they continue to provide this service and they don't lose any customers, they will be getting this revenue. And right now, that reoccurring revenue is $1.05 billion annually, which is fantastic. So as I said at the start of this video, this company uses cloud and AI technology to fight cybercrime. So cloud scale AI, our AI technology gets smarter as it consumes more data. So as it fights these cyber attacks, as it notices different patterns, the technology actually gets more efficient at fighting it. Therefore, this system is learning and getting better and better on its own, which is fantastic, because it means that if I'm a subscription customer to this model, then it's only going to get better for my subscription. It's not like I just buy the service and install a disk and it doesn't change. No, this continues to get better automatically, meaning that my subscription will technically be worth more as time goes on, if that makes sense. The way I see it is, if they're getting these customers now at this level that it's obviously still good, then it will be a lot more easier for them to get customers in the growing industry later on, because this software is going to get better and better and better and more efficient and effective in fighting cybercrime. And cybercrime in itself, we saw that it's a growing industry. We can understand why, because obviously technology, computers, that's going to continue to grow. They aren't going away, but it also means that the hackers are getting smarter and getting access to better computers. And with a lot of issues such as cryptocurrency now, I wouldn't necessarily call it an issue, but it would be an issue if they got hacked. So there's cryptocurrencies and so much more valuable data online. People want to ensure their stuff is protected. I mean, if I owned a Bitcoin, I would definitely want to make sure that it is with a company or in a wallet that can't be stolen, because the value of that is tremendous. So it's worth investing in a good software like CrowdStrike to do just that. Rapidly expanding customer base, subscription customers. Look at the growth here. In 2017, there were only 450. Then we went to 1,224, and we grew every year. And right now, 2021, we're at 9,896, representing 82% year-on-year growth. 58 of the Fortune 100 companies are using CrowdStrike. 177 of the Fortune 500 and 12 of the top 20 banks. So with a customer base like that, you can see that this company is legit. They have a great software, and this, if they're good enough for the banks, if they're good enough for 12 of the top 20 banks, 58 of the 100 best companies, then they will definitely be good enough for everyone else. And to me, this gives them mad bragging rights and a massive competitive advantage, because when they can say this to a customer, then that customer will think, well, you know what, if they're good enough for the banks, they'll be good enough for me. Cloud workloads are under protected. IaaS and PaaS, and the difference between those is IaaS is cloud, whereas PaaS is software. Revenue estimated, so 2020, 106.4 billion, 2023, 217 billion. And this is why I said I see this company growing, because they are estimating a massive amount of revenue. This industry is going to be huge, and with figures like this, obviously we can see a lot of growth in the company and in the stock price. Now, cloud security spend, worldwide hybrid cloud security revenue estimated 1.2 billion and 2 billion. Cloud security spend as a percentage of cloud IT spend, 1.1% and 0.9%. Now, what they're basically saying is that cloud security is extremely inefficient right now, and there's not enough of it, meaning that there is a massive market opportunity for CrowdStrike, which is obviously good for the company. Now, they're saying that 2023, the cloud security opportunity will be 12.4 billion, which is 10x their 2020 market estimate for cloud security spend. Now, looking at the numbers here, you can see why I think this company will continue to go up in stock price and valuation, because they've seen 75% year-on-year growth. And just look at the chart, you see it just going up, growth, and it just gets steeper and steeper and steeper and steeper. And that's because of obviously cloud technology has gotten better. And as I said earlier, there's a lot more reason to have a cyber security company and a subscription-based model these days more than ever, with the rise of cryptocurrencies and just the amount of sheet information that's available online. I don't think this is going to slow down. I truly believe we can see them double again over the coming years, which will mean massive stock price predictions for this company over the next few years. I've said this before about some of the other stocks I've spoken about. I love reoccurring revenue. I love the subscription-based models, and that's what we see here. 92% of their revenue is subscription-based, which means that they're going to be getting that money consistently without having to get new customers, which is fantastic for the balance sheet and fantastic for them to plan and continue to grow the company by reinvesting in it, because they know how much money they're going to have. They know when they're going to get the money, and it's just extremely beneficial for all parties involved, not just for the customer, because the customer, instead of having to pay a larger lump sum for this technology, they're paying these smaller subscription-based fees, but it also means that their technology, the software will continue to update using AI because, as we said, it grows, it gets smarter on its own. So the technology keeps innovative for the same price and everyone's happy. So I think this is a fantastic model. I've said it for all the other companies. I think subscriptions are the way of the future. And I personally think CrowdStrike is doing everything right. So I found this slide quite interesting, and it shows me the value of each customer to the company and how much a customer is worth, because 47% of their customers actually own 5 or more subscriptions and 24% own 6 or more. So it is extremely worthwhile getting customers for this company because they're not just getting one subscription, a large majority of them are getting 5 or more, which is insane. And it also speaks about how good the company is, because if you've got one person, one company, one organization ordering multiple subscriptions of CrowdStrike's technology, then it is definitely worth the while. And especially, as we said, their customers are such big names, 12 of the top 20 banks, massive. Now, the moment you've all been waiting for, let's jump into the analyst price targets for CrowdStrike Technologies. The average is $252 a share, with the highest being nearly $300 a share and the lowest being $200 a share. I personally think, just looking at the numbers and looking where this company is going in terms of their recurring revenue, what they're thinking they're going to get as a percentage of profit, just the industry they're in itself, where they think it's going to go. My personal price targets for this stock are $260 a share in the next 12 months. And later down the track, I think that's looking a lot more like $400 a share, but that's a few years away. This company to me is not a swing trade. It is a long-term hold. It's one that you can put your money in and rest assured it will grow. But of course, I'm not a financial advisor and this is not financial advice. Please always do your own research before investing. I'm just a guy on the internet and stocks are risky. So do your own research, use your own information, check out other YouTube videos, check out their investor presentation, check out their recent news, what other people are saying, and make your own decisions. Speak to a financial advisor because I am not that. Thank you so much for watching, guys. Till next time, have a good one.